Hey guys, welcome back to the Real Estate Monopoly. My name is Kerwin, and we are the Donis brothers. Though I'm here alone today, but not alone because I have an amazing guest, Elisa. Thank you so much for being here. I'd love it if you could kind of introduce yourself to the audience, but first I will get into your background. So, Elisa is the principal over a multifamily real estate portfolio of over $650 million in real estate, and that's across 3,000 properties, apartment units. Elisa has built a path to financial independence for herself via real estate, and that took less than 10 years after she left her IT career in 2019. Today, her mission is to help other motivated 9 to 5ers do the same through her platform, Easy Financial Independence, and also her podcast, 10,000 Roads to Financial Independence. Thanks for being here today, Elisa. Please say hey to the audience.
Thank you so much, Kerwin. Hi, everybody. Well, I'm really glad to be on this show and looking forward to spend the next couple, 30 minutes to an hour with Kerwin over here.
Absolutely. Well, thank you so much for being here again. I'd love to start out just by kind of diving into what your life was like before real estate. I kind of like giving our audience like an idea of who you were before you even found out about real estate. And I touched on that regarding your IT career, but if you want to kind of provide some context.
Yeah, definitely. So I was just kind of reflecting back with my husband the other day. It was like, you know what? It's a my life before this whole endeavor was very much an A to B, B to C, and then you kind of have everything kind of planned out for you. There's a very much of a formula, go to school, get a job, get a great job, working for Fortune 500 company, and then you're set, right? So that was kind of like the life is like before, working for an IT company, just kind of climbing the corporation ladder. There was not really large goal other than just like follow the formula that was laid out for you. And later on, certain things have changed in life, such as a life-changing event. We always say, like, when we have a life-changing event, that kind of puts your mind into high gear on finding out why your purpose and what is important for you. And then during these time, you start realizing like, I really don't have freedom time. I really don't have, the freedom to kind of live or doing the things that I wanted to do. And instead, I spent majority of my time at work. When my daughter was born, I was commuting more time than the time that I spent with her on a daily basis. So something is just did not feel like it was right. It was like not the way that goes. And also for some of us, we have limits when we climbing corporation ladder. If you think about how companies set up, if you're a Fortune 500 company, you probably have like 5,000 employees or more, maybe 10,000. And out of all these people, you only have like maybe a handful of C-suite. My dream was never become a CEO of a large Fortune 500 company. So then where are you at, right? So like, I think living life intentionally, the more the older you get, kind of the more thought process you have over there, because there's enough life-changing event in your life that makes you wonder about the purpose of life and what you're here for and all that sort of idea. So
Yeah,
that was kind of life like, before the investment venture.
I love that. And I can understand how maybe a lot of people might see you having been successful in the IT space, but it was still like not really adequate and kind of the lifestyle you wanted. And that obviously led you to real estate. I would love to know, was there like a moment that you came across real estate upfront at first and you kind of were exposed to it? What was that experience?
I think growing up, I think like many people, growing up, you kind of hear news about like some people who are like rich on the news, and it's always about like, oh, they own real estate, they own this big giant building, this and that. So you kind of, I think unintentionally, there's always this thought idea of, okay, investing in real estate is a viable investment option. Like the time when I started investing in real estate was actually unintentional. Well, it's intentional and unintentional. When I say unintentional, there's no purpose. But it was intentional because this was a vehicle after a brief moment of thought should be something that we invested in. There was no investment goal or anything other than simply in 2009, market seems to be right. Now it's a good time to buy. And, we saved us some money and then here it goes.
Yeah.
So I think it's very important looking back where I'm at right then, it was great that we pulled a trigger to do something. That's always better than doing nothing. But also if we would educate ourselves, be more intentional about, be more strategic about things, we would have gone a lot further than we are.
Yeah.
So but like you can't change the past, you can't change the past. So it is what it is, and I think each person have different speed on trajectories in their career. It's never a right or wrong answer to that.
Absolutely. And I know I've heard you mention how you didn't really educate at first. And like you kind of mentioned, there was some pros and cons to that. But it sounds like at least you were able to avoid that analysis paralysis trench that a lot of people get caught in. And a
Yeah.
lot of investors, even we got caught in that at first, where we spent a few months educating. And it's important to educate, but a lot of people never take action. And what's the point of that education if you never really apply it?
Mhm.
I also kind of wanted to dig into starting out. Did you have any like doubts or fears or I guess misconceptions about real estate? And what were those? Can you provide some insights into your mindset when you were first embarking on that journey?
Yeah, so there weren't any doubts. It was literally, I mean, the alternative was the mutual fund account. Like if you recall back in 2009, 2008, 2009, your stock portfolio is not really that performing. It's probably at best losing 25%. So, here we are like putting money into retirement account, subscribing to the Wall Street narrative. So like, hey, putting your money away, like invest in a maximal into 401k accounts, and then you give it to some mutual fund person, and it's a very limited choice because 401k accounts are very limited. And every day you look at that statement, or every month you look at that statement, it's not going the right direction. It's like, how can you actually retire with the non-growth of your portfolio, and only putting away, even if you contribute maximum like $18,000 a year? How do you then ended up with the amount of money that you need to live? And just simply mathematically, it makes no sense, right? Like if you think about it, if you for 30 years you invested at $18,000 a year, let's just say roughly, and then you're expected to live 30 more years after you retire, you didn't live on $18,000 budget. If that money did not grow, then what happens? Of course, the Wells Fargo's and all the other folks would tell you, oh, put money away, there's a compound interest impact, and but in reality that doesn't seems to be how it works. So then we know there's some alternative real estate, right? So we have a good amount that we saved up. We're lucky we didn't get laid off during the time, so it was unaware the danger of everything. You just like, hey, like I have a stable job, I have some extra saving, I can put it in somewhere. So it was not in, like it was non-purposeful at all. You
Mm.
don't know why you're investing, but you're like, hey, it's good pricing, so buy something. And then also location is what everybody says. So we bought the best location, a condo in the best location. Now,
Mm.
hindsight looking at this, I think you want to strive a sweet spot when you're buying single family home rental or your first investment. You should probably buy it in a like not a maybe A location, maybe a B location, maybe not an A class, maybe something that has a potential to grow, so because the acceleration of the growth will be a little bit faster. Or if we are not aware of cash flow until 5-6 years down the road, after we invest our first investment, it was more about an equity investment. So you kind of I ended up in a negative cash flow situation, but maybe $100-$200 a month. Wasn't bad, it was not something I couldn't afford. But we all read Rich Dad Poor Dad. I see that on the back of your shelf over there. If you look at the quadrum there, you're like, actually, like we're in a not very good investment
Mhm.
from a cash flow perspective.
Absolutely.
Um, but equity, there is value to be said about equity growth. And there is a value to be said about investing in the right market, right timing. So these we did right. So to me, that there is not too much fear because we feel it was the bottom of the market. So it's like, how much lower can you go? You can't lose. That was the mentality that we had.
I
Yeah.
love that mindset, and that's really inspirational. I think a lot of people can kind of apply that to their own journeys in real estate. And it sounds like you, in a way, didn't have that much to lose in because you were already investing. It was just finding a better vehicle for your money because the stock market at the time wasn't performing well. And so, real estate, yeah, there's other benefits besides. And it sounds like you were also negative cash flowing, which, like you mentioned, is not ideal. But as long as it's, other factors are at play and it makes sense in the long run, then I mean, I suppose that worked out in the end, right?
Right. It was a blessing of oblivious. You know?
And
Yeah.
can you actually, I was going to talk about or have you lean into and sort of expand on what that first real estate deal was that you ended up getting. But can you also maybe dive into the first steps you took as you started, you decided you were going to invest in real estate. What were some of those initial steps you took and how did that lead to your first real estate deal as your actual investment property?
Yeah, so we have no clue about how to invest in real estate at all. And but I do know that hey, I have 60 or 70K saved up. So I know I can put it as a down payment. So I did do a little bit of research. I mean, we have no clue how to invest in real estate. So at the university nearby, there was a course. So I looked online. I'm like, how to invest in real estate? And then there was this course that talked about like a couple hours course talked about how to invest in your first home, right? So then we're like, okay, let's figure out like the procedure how to do this. So we did took a class. And then from there, the guy who gave the class was actually a pretty experienced real estate investor. And then he had a network of agents. So from there, we met and interviewed, followed what his class was teaching, interviewed 3 real estate broker. We picked the one that we feel was most suitable for us. And off we went. It's really kind of putting our destiny in our professionals' hand. But there is a small amount of education there. And I think it's thinking back, it's it's okay to learn just to learn to help you to figure out the things. Everybody's different. But for me, it was always that we set a goal and then I go look for information that is leading up to that goal that make it successful. And then we pull the trigger. So it's always that 1, 2, 3 formula. It's like, oh, here's the things that we want to do. Let's refine the idea. And then 2 is getting some education necessary steps to get to where we need to go to understand this enough. And at some point we understand enough, not everything, and then we'll go pull the trigger. So that 1, 2, 3 step really kind of served all around the way. Whenever we bought our first condo, it was a condo that we bought. And in fact, before that, we bought a primary home as well, which is, rich dad would tell you it's a liability. But we bought her a single family home and then we bought a condo. And at some point, we also have asked for a loan from my parents because we bought a primary home and I'm like, oh wow, like the market's really great, we should probably really invest it would be really set us up properly if we added one more rental to on top of it. But we've used our savings, our liability, our primary home, and so then we only have a little bit left to put down payment for next deal. So we looked for what is the minimal entry points, and that was a condo, and it seems to be simple enough because we don't have to deal with anything else other than in that little box, and that's standardized too, so very little on the construction that needed inputs on. And it's just really simple. You buy this condo, it's ready to go on day 1. You put a tenant in there, there should probably cash flow. It didn't cash flow, but it should probably be okay. It will pay for your mortgage, right?
Awesome.
So and then the question has become funding, like who can we borrow money from? And then I did ask for a loan from my mom at the time because she was like, oh yeah, it's a great opportunity to buy. And I was like, well, I want to set up a loan with you. So I did carve out a very particular note and then set the terms and all that stuff. So through there, I researched about how mortgage works because I kind of drafted the same term for her in terms of amortizations and this and that. So obviously in a year, we were able to pay her off. And with the interest rate that is higher than what's on the market, so kind of creating a little bit of win-win situation for both.
Yeah.
So that's probably the first partnerships like or
Yeah, that's
lending
perfect.
experience,
That's
with
awesome.
that. Yeah.
I love that. And I have a lot there I want to dive into, but first, it seems like in a way you did invest in yourself and in your education when you joined that group and you started networking within the space. So obviously, I know now that you eventually find your way into the multifamily space, but that's
Mm,
like a spoiler alert, to the
yeah.
audience. How did you find your way transitioning into multifamily? And did the fact that that property was negative cash flowing and maybe you like found it a little hard to cash flow in the single family space, did that influence your decision to move into larger multifamily residential properties?
It did, but also didn't. Again, I think again, like everything that happens in my life, there was always a goal, and the drive is often not monetary. The drives are often is because there's a life-changing event that happens in your life, and then this is very typical with the investors that we talk to too. It's never like I want to make more money. Well, some people will say that, but it's never I want to make more money. It's always I want to spend more time with my kids. I want to, this and that happens. So for me, my daughter was born. We were buying some single family homes up to that point, following the same formula. Maybe it cash flow a little bit better. So at least it kind of pays a mortgage and cash flow maybe $100 or whatever. We don't even know the concept of cash flow after we invest in all these single family homes. Until when my daughter was born, I was commuting longer than I spent time with my newborn daughter. And that was just created an imbalance in my life. And then there's the drive that's being created through the lack of time, lack of flexibility to spend time with her. And then from there, it pushes me to research for how do you quit my job, invest in real estate. That was like literally the question I asked Google. And then the bigger pockets came up. So then I get devolved into the content, just basically read up and down all forums. Back in the days, there's much like way fewer blog posts on bigger pockets, so it was possible to go through the whole forum within a couple weeks, and then realize there's this thing called a cash flow everybody's there talking about. Start listening to some podcast, and every single podcast episode, like a 9 out of 10 favorite book, because they do this quick rounds of favorite book. A Rich Dad Poor Dad was always on the list, so I'm like, well, I gotta read this book. But before that, I would kind of know a little bit about a cash flow. So kind of dived into cash flow. I'm like, oh, like we're doing all this wrong the whole time. But good news is we bought in the right market. So there was accumulation of equity, and which allows us to set up ourselves up to position our portfolio and selling them, converting into fourplexes, which is the biggest residential multifamily you can buy without having to learn anything about commercial lending. So that seems to me, it's like, okay, 1 to 4, enough challenge. And I'm not ready to take on this other commercial, lending piece. So you always try to set yourself up for success, having a big goal, but also just understand that each segment of it, it's attainable, it's achievable, that you can learn the knowledge is something that you can wrap your hands around.
Mhm.
So to grow that to the next level, like if you grow and jump to like 2 3 stages, you may not set yourself up for success over there. So for me, it was always like each transaction want to learn something. So from single family home went to multifamily home, and then it's fourplexes. So we don't have to take on the other complexity, which requires a whole new set of people involved. We were still able to use our same agent, but now the property is different. The tenant bases are different. It did create some cash flow, but it took more work because of value add multifamily. It took work for us to get there. We I self-managed, signed leases. I was literally like taking my 2-year-old daughter around, and maybe 1-year-old daughter around, and then signing leases and this and that. It's a very much a family operation. And my husband was renovating units, and that was not great because he's straddling between watching our kids for half a day and the renovate unit for half a day. So it take forever to renovate these units. But we were kind of following the formula that was discussed on Bigger Pockets. I start going to some local meetups, and get to learn other people's lessons and this and that. Actually met my current partner, one of my equity partner, way back then. Because I was kind of bridging myself into this multifamily world.
Yeah.
and selling my first condo that I bought. That first transaction of selling just takes you way longer time when you're looking back now. It's obviously setting up for buying more multifamily, but there's that transition of like selling our single stuff and then moving into multi.
Yeah, no, that's so insightful and really awesome to hear, because I think there's sort of two schools of thought when it comes to getting into multifamily or just even growing as a real estate investor.
Mhm.
Some investors, and there's two paths as I see it, and I think we took the path where a lot of people say if you want to go into multifamily and go into apartments, like just go straight big. But I also understand and completely value like the path of scaling your way up and starting from the smaller unit to kind of going into the larger units. I think that in a way you learn a lot more. And it just the downside, I'm sure, is it takes a little longer. But I'd love to know, where did you end up? Like, are you still doing those smaller units? I believe you're doing larger, but I don't want to put words in your mouth. So where are you, like, what kind of sized unit deals are you doing right now?
Yeah, so we now have $650 million AUM, which is asset under management, and it's across probably 3 states, mostly two, Texas and Arizona, Phoenix specifically. And then we have probably about 18 apartment buildings that's ranging between 27 units to 302. And then locally, I still hold my own local stuff, about 20 units or so in Washington that has no investors in it.
Mhm.
I would not put investor in these investments, just too subject to government regulations and all the other stuff.
Yeah.
But basically, that's kind of where we ended up, kind of growing one step at a time. And it's definitely from an outside perspective, it's in very accelerated pace. But like when it's all perspective, when you're looking at the players in this field, you're like, are we really accelerating? Well, no, we're certainly not the biggest operator in this zone, right? So it's really perspectives. And I found that what's useful over the years is being in a room of people who are at the next level, and then creating a community and having a community that's at the next level is going to help you think bigger, thinking more creatively, and help you feel confident that, well, if someone else has done this, there's a way to how. And then between A to B is just figuring out how,
Mhm.
right? So that's kind of like it grossly simplify the problem. But
No,
it creates your confidence on like taking that next step.
absolutely. And just for context, can you explain maybe from that 4 unit deal you did to now, how many years has it been?
Um, well, since 2009, we start investing. I think 2015 is when we closed, beginning of 2015 is when we finally closed our first deal. We started working on that in 2014. And then fast forward, we start doing syndication, which is outside of the state. Syndication is just gathering people's money together and then invest into a deal. So things 2018. But in between then, from small multifamily, the residential multifamily specifically, to commercial, we also in between has owned smaller apartment buildings that was semi-local. And before we took the leap and went outside of state, I was told you need to have more than 100 units once you go outside of state for scalability. Now we know that's not the truth. But basically from there, from that gap, but the biggest thing is education, is basically learn the fastest way to get there is through education, and then exercising that education that you have learned, and of course along the way, meeting crucial people, partners, people to help you get there.
Yeah.
So yeah, so from that fourplex to, then we bought small apartment buildings, did operations still. And then once we went outside the state, didn't feel confident to run a big building right away. So we passively invested as well. And then we got involved into active side of thing, one thing at a time, just, from smaller contribution to then bigger and bigger. I didn't really want to operate in my large apartments, but due to this and that reason, we ended up asset managing them. So, that's kind of like, it also helped us helped me recognize the limited belief that I had
Mm.
prior to going out the state, you know.
Yeah, absolutely. And an example of how you had to pivot. I think that's a critical tool and skill that all successful investors need. That is awesome. So, I, I think in an interview that you've done, you mentioned how you're actively looking for opportunities right now. I've spoken to multiple investors who are choosing to sit on the sidelines, and I always love like diving into an investor's sort of investment philosophy of why they think they should always be looking, or maybe timing the market. And that's a topic that I wanted to dive into right now. What is your perspective on timing the market? And should an investor, particularly maybe a passive investor, should they be timing the market? And if they shouldn't, how have you what can they learn from the way you maybe have tweaked your investment criteria to sort of mitigate the changing and uncertainty, the changing economy and the uncertainty in it?
Yeah. So my concept of an investor is if you're not investing, you're not investor. So that kind of summarize it all. Like you have to constantly look at opportunities and not taking like a passive backseat on things. And then it really comes down to your risk tolerance. So to me, sitting at an inflation rate of 8.5% or higher, I think the Wall Street would tell you it's 8.5, but the Main Street would tell you it's 20% inflation. You're losing money at the rapid pace. So how long are you going to be losing money with that? We don't know where this inflation is going to go. We don't know how long it's going to last and this and that. But we know one thing for sure, when you're just sitting on top of pile of cash, you are losing dollars.
Mhm.
So that's a risk. It's not non-risk sitting on the sideline.
Yeah.
And timing is really difficult. Like you can ask any stock investor, how are you timing the market? Like, you know, like the best experienced stockbroker would tell you timing the market versus consistent investing always wins out at the end of, 10 years spent, 20 years spent. There are opportunities that you can see if you're educated, if you're very educated in this zone, like why Warren Buffett makes great investment. He conditioned the market because Warren Buffett's to go say, hey, buy this, everybody will go buy this. So there's some conditioning of the market going on there. But also like he probably did a lot of research, way deeper research than an average investor did. He knows this is the lane that he's in. So we know multifamily apartments, this is what we know. So we have a little bit more inside knowledge into that. So of course, that's our choice of investment. But also, I think at each cycle, there are opportunities. So in this cycle, I think we start seeing some discounted property that we bought in the last year, even in the 6 months ago. They're a little bit challenged to operate because the market has changed a lot. So we have to kind of focus on expenses, focus on cash management, just kind of writing out the lows to some extent, and then focus on readjusting investors' expectation and letting them know, hey, it's going to be a long haul. Being transparent with your investors and being proactive, being transparent is very important because everybody knows it's, unless if you're hiding under rock, you wouldn't, like, everybody knows the interest rate is a challenge, right? So just be able to kind of addressing these concerns. And then we also selecting our investors too. That's important, is you want investor invest with you or in this for the long haul versus a very transactional relationship. So all these being said, we do optimistically feel that the market will have to have some massive cash management to get out through the lows, and these investment will return, because market is cyclic. So if you take a long-term lens at it, it's going to return. Second, right now, maybe a good time to buy. 6 months from here, maybe a great time to buy. You never know when the market's the bottom. You never know when the market's top. So I do know there's a lot of narratives that don't catch in a falling knife. But if you asked the advisor givers, they are making moves as well. So it's about which asset type, because every market has a favorable asset type and every market has a favorable cycle on discounts or not. So you just have to be falling into your criteria, being very conservative with your underwriting to protect the downside, do stress tests and all that stuff, and be aggressive and going out there, continue making offers. You may have to make a lot more offers before you can land the deal, compared to the little bit loose criteria that we have been employed 6 months ago even. And so you may end up with less deals. And that may create some cash flow issues for your company. When I say company, like we have a team of 15 people, you got to make sure that you have cash flow to operate, having the runway for your team as well, like any other business. um so these are things to kind of really consider, like, and also making sure that you're protected with the downside worst case scenario
Mhm.
where the rates may go way up. You need to have a deep pocket to fund the deals that's already in place. B, deep pocket on big reserves to make sure that it goes through the cycle. um or some sort of rate cap to protect you up, like upside of the rates. um or fixed rate debt. You may have to pay a bigger prepayment penalty later on the way, but it's a risk assessment whether you want to take that risk or you want to say, you know what, I'm going to take my losses on that and put that into your analysis underwriting.
Yeah.
Other things that we're doing over here is I do think that there's going to be a lot of management changes, third-party management changes. So we are going vertical right now, which means that we're bringing in the property management under our fold to creating a more end-to-end control over the whole pipeline. And I think recently I just had an interview with another great syndicator. We kind of talked about, like, there is advantages of in-house management because it allows you to pivot during these moments, but it is a very long way to set it up, and it's really heartache for a lot of people, and most of the syndicator would not want to take on that effort. But I always believe in, if you take on the challenges, the effort you build, you spend way more time to building something, you build something that is more resilient. And then in the next cycle we may need that. So every single cent would count, every single percentage would count, and then you just want to kind of squeeze out as much of as efficiency as possible.
Yeah.
uh yeah.
Well, that's awesome. It sounds like you're just having some good growing pains, different problems. That's good. You always want to be having different problems. So really inspirational to hear. And I'd love it. I mean, to kind of continue down that path of maybe things that aren't necessarily easy. What has been a major failure that you've encountered along your real estate journey? Maybe a deal that didn't go as planned or something that took longer than it did. Can you maybe be specific if it was a deal and just kind of explain what you learned from that?
Yeah, so every single deal is never as expected. I always tell people, like, your deal is pretty much never ever as projected. It either does better or does worse, or it could does worse for a period of time and does better at the end of all. So it's a journey that you go on, and then the way that we simply doing projections are very much formulated. It seems to be very planned and formulated, but in reality, when you hit the ground running with operation, it can go either every direction. So along the way, every single deal teaches me something. And I would say this, the challenges on the deals create who we are today, and it helps accumulate these experience. So there are deals that's not cash flowing. The worst deal that we've done was we were not the asset manager. We were involved in that. I think aggressive underwriting may have contributed to it, but there's a lot of things that has to go wrong to crash the plane. And I think I counted there maybe 6 or 7 things that was wrong with these deals. So but at the end of the plane was not crashed. And the investor still made like maybe 10% return over the course of 3 years of holding, which is nothing to write home about, right? So but through it all, since we weren't the main asset management, but on the sideline halfway through the project, we have to kind of take over, not take over, but we have to co-asset manage the property, due to our investor monies are in there and you're responsible for that, right? We learned everything from proactive communication to being just transparent, to not setting the expectations that you can't really meet. And it's okay sometimes to leave the target being vague, but having a very clear plan. And there's a lot of cash management stuff. And it was also COVID kind of hit it sideways too. There's multiple things wrong with that deal. There was the COVID that hit it, and then the Texas freeze hit it. It was like, when it rains, it always pours. So it seems like it's just a never-ending projects that would never recover. But at the end of the day, when you bought it right in the market, you still kind of recover from there. So until this day, I'll still say haven't lost anyone any money yet, you know. And so that was good. And then also test the characters, making sure the GPs are agreeing that because you got to do cash calls, but making sure you're agreeing when we're doing a cash call, we're the first one that putting the money in. So you're out money, you're floating the deal, right? Just the whole objective is making sure investors do not lose money, because your
Yeah.
reputation is kind of built in a day. Sorry, your reputation is building years and it can be ruined in a day. And then a lot of stuff gets learned. We figure out how to efficiently use software solutions to manage cash flow, to limit the downside risk of people moving out, losing deposits, and all sorts of stuff. There's so much stuff that we have learned from that single deal compared to any other deal add together.
Yeah.
um, and which builds the confidence on like, okay, stuff is gonna go sideways in some ways, but here's a few things that we can do to recover from there.
Yeah, yeah. So to kind of reiterate, it sounds like you learned the importance of really being involved in the asset management, and yeah, that was your role kind of changed from maybe being a little more passive or hands off to really being intentional with having some ownership in that realm. Is that right?
Yeah, exactly. Yeah, yeah. And then always have multiple exit strategies. So like when you're underwriting a deal, it's not always like, hey, we have to sell at this price. As long as you're cash flowing, it's fine. The market's gonna recover. So but the pathway to positive cash flow is one that needs to be dotted on. And then the wrong ways for getting into past, positive cash flow needs to be monitored.
Yeah.
Yeah.
So I don't. You can kind of respond to this next question, and if it's similar to the one that I just kind of touched on. But what has
Mm.
been a major way that you've kind of been forced to change throughout your real estate journey in order to achieve the success you have today and kind of navigate the rough waters that you may have encountered?
Yeah, I think investing is kind of like art. Like, and then I think being an entrepreneur, you have to accept the fact that certain things are just not in your control. There are certain ways that you want to do things. It may not end up to be that way. And then so when these things arise, you just have to pivot yourself. In case of point, major point over there is that when we first set it out to do syndication, I was only interested in doing capital side of things, investor relations, dealing with people, communication, maybe some deal structure. So these are the only things that I'm interested look at, which is being strategic. That's kind of what I'm good at. Um, and along the way, we had to take over asset management. It's a deliberate choice we have to make. But it's also unintentional. It was, one of our partner decided not to do asset management. So after we close, and what are you gonna do? You have the choice of just say, never mind, guys, we're like, you can't even get out of the horse that you got on. So then you have to kind of roll up your sleeve and just doing asset management. And I think from there, we learned a lot. I mean, like it was funny, even the year before, like a half year before, one of my business coach was like, hey, have you ever thought of like just do the whole thing vertical, like as asset management? And I'm like, no way. Like, this is not the vision I want. Like, I want to be kind of keep on the capital side of things. I want to keep on investor communication because people is who I want to deal with. Um, like and a half year later, this happened. Like, well, I guess we have a full-on operation now. So like it kind of, but it pushes me to grow. And similarly now, we're not just sitting there thinking about, oh, how do we like proactively create property management company? It was always a possibility that we would do it, but we're like, hey, we're gonna write this as long as we have a great third-party manager. But then if your third-party manager isn't growing with you in scalabilities and they kind of falter in a very large major way, then you're like, okay, wait, what are you gonna do? Right. So you have choices, switch to a other third-party manager, which by the way, I've worked with 5, 6 different ones by now, or take over the operation and being vertically integrated. When you have enough units, that's an option, and then you're like, okay, great, we're gonna burn like a year, 6 months to a year of productivity just taking on this new business that is not profitable at all, because property management business company is not profitable at all. Or we hire a third party manager, hope for the best, right? So that was a decision that we decided this is where we're going to go with vertical management, but it's a huge growth opportunity. From the employee perspective, you're going to grow from a 12 people company from just the equity side
Mhm.
to all of a sudden like close to 100 employee. That's a lot to take on just from operation growth.
Yeah.
And but it helps you to think about the business with a next level lens of eyes. So I look forward to having this all set it up, because that's a huge amount of learning. And
No,
then we'll
yeah.
come out better at the end.
Absolutely. It sounds like I said earlier, I mean, growing pains, you're having to pivot, but it sounds like you're going in the right direction and scaling. And that's really where
Yeah.
we all want to be. So very inspirational. It is time for our speed round. Lisa, are you ready for it?
Sure.
Awesome. Awesome. Nothing crazy, I promise. So to kind of fast forward to the present and just catch people up to where you're doing today, you touched on it, but if you have anything to add, where is your business at today in terms of scale and success based on how you would define that?
Yeah, so we have about 650 AUM under management, but I think the key is to making returns to our investors. And then we have a lot bigger audacious goal than what we have right now. So we feel like we're just in the beginning of when we get started.
Absolutely. I love that. What is one reason that you're grateful for real estate and or how has it impacted your life for the better?
I think at first there was a very selfish reason. It was just simply getting the flexibility of my time back, being in the control seat of my life. Ever since then, since you create a company, now you have payrolls and etc., it becomes a different reason. Because once you're comfortable by your individual, you start thinking about the impact that you're making to other people. And this is a vehicle. It took a lot of soul searching for me to realize it is a vehicle that can help influence every stage of people's life, which is a vehicle that helps us to up level everybody around us.
Yeah,
Yeah.
real estate is truly really powerful. I love it. I love it. So what is your goals? You touched on it, but what are your goals for your business moving forward and what are you aiming to accomplish in the future?
Yeah, so business goals are really arbitrary. I would say there's always this idea of like, hey, setting up a business goal and you're gonna go hit it, and after you hit it, there's no happiness, you just move on to the next one. So really our essential goal is try to impact 1 million people through housing by providing financial literacy, use these as a channels to distribute. So probably a little bit different than other multifamilies objectives over there. And it's really impact that we're going after. And that this is a vehicle that kind of plays into this, right? Just it is what it is right now. So to simply get there, 1 million people is about 500 units, 500,000 units, and then that's really large portfolio. So we did this back in the napkin calculation. If you set an arbitrary goal of 10 years, you're going to get there. Then every year you just have to simply double your acquisition. Simply, I put that. There's a lot of challenge and stress we put in the system for that.
Oh yeah,
Yes.
I'm sure. I'm sure. And if there was one book that you'd have to reference in terms of having the biggest impact on your personal and or business life, what would that be?
I think you kind of have it set it in the back, the who not how.
Yes, I love it. Awesome. Awesome.
Yeah.
Great
Yeah,
book.
who know how. And then together with that book, the gap and gain. And I think that's Michael Wise of managing your mindset, being in GAN versus gap, and then who not how helps you accelerate your business.
I love that. You shared a ton of knowledge today, and I really appreciate it. If there was one piece of advice or wisdom you'd want our audience to walk away with from today, what would that be?
I think taking action, like do something, like even if that is to get educated, taking a calculated risk. So the calculated risk is it's a combination of action and education.
Mhm. Awesome. Awesome. I love it. Thank you so much for being here today, Elisa. It was really awesome getting to know you and just chatting with you. If anyone in our audience wants to learn more about you or follow you on your journey or just get access to all of the awesome resources you have available, where can they go find out more?
Yeah, so just check out www.easyfiuniversity.com, easy as a E Z. And basically we have free blogs that we publish pretty much every week over there. We also have a course that's coming up to teach people how to passively invest with a very systematic approach. So it didn't feel just like, hey, I'm investing in the next best person that I know, right? So it's a much more systematic approach, and there's certain things that you need to set up before you do these investments. So we do have that passive investor course that's coming up. You can also find the details on our website as well. Yeah.
Perfect. Perfect. Well, thanks again for being here. And thanks everyone for tuning in today to the Real Estate Monopoly. Please make sure you go and leave a 5-star review and comment down below. And guys, let's get out there and take action. Have a great rest of your day.